Good morning and welcome to Economy Show. The oil markets are normally high sensitive to political conflict and military tensions in the Middle East. This, however, doesn't mean the same the case with the recent rise of ISIS. On the contrary, markets have been remarkably calm and oil prices fallen. By contrast, the onset of the Arab Spring a few years back seemed to push the oil price up. Join me to discuss this issue from New York, Dr. Al-Ibrahim, a petroleum economic consulting at Nasdaq, and from Dubai, Dr. Fahad Al-Sufyani, economics professor at American University in Dubai. Dr. Ali, what are the basic reasons behind this decreasing trend in your opinion?
Thank you, Ali, for having me on. As we noticed that the world crude oil price have declined by over 20% since last June. And these prices are projected to possible decline to much lower level by year's end. Further decline in a crude oil market price will impact most petroleum oil supplier and consumers. And this could reflect the great opportunities for many countries because lower oil price would directly benefit consumers and help struggling economy all over the world. Now, the decline in oil price, however, can change economic and other risk to many petroleum oil suppliers. Will decline crude oil market price create a significant economic and sustainability risk to the OPEC Carol, U.S. energy security, or any other alternative clean flow programs. If you ask me why this happened at this time, well, world crude and petroleum oil price are normally fairly volatile due to wide variety of market and politically related supply and demand factors. Recent world crude market price decline have apparently been due slowing or reduced demand level from combinations of a slowing Asian economy, mainly in China and Japan, and the chronically slow and deteriorating European economies. Also, substantial growth in the U.S. domestic. On the other hand, there are increasing in supply, especially from the U.S. by shale formation, and that's put America at the top of oil producers. Also, there are a significant production increase in Canada and Latin America, as you know. These and other supply demands influential factor have led to very significant crude and petroleum oil market price fluctuate over the last few years.
Okay, I would like to ask the same question to Dr. Fahad. What do you think the reason behind this falling?
Thank you, Ali, for having me. I would like to think that there is a geopolitical motive behind the Saudis' call for OPEC to reduce the oil production quotas. This is the cartel has traditionally used to keep oil prices higher. That is because the lower prices are less harmful to Saudi Arabia than any other country. If you take, for example, Russia and Iran, these countries have angered both Riyadh and Washington by helping Bashar al-Assad regime in Syria. And in Iran's case, for example, Iran always contests Saudi influence throughout the Middle East. On the other hand, for US, the oil price will put pressure on Moscow's calculation regarding the Ukraine issue by imposing economic sanctions. So it's essentially a sanction. It is estimated, for example, that Iran need roughly around $140 per barrel to balance their budget. And for Russia, they need it to be over 100 according to the latest study. The Saudi, however, have one of the lowest costs to produce oil, and therefore they have a better tolerance to the lower prices than any other nation. All of this collectively, I believe, will force Tehran and Moscow to attend any negotiation table in the future.
Okay, Dr. Fahad, how relevant is the demand forces in driving the international prices for oil?
The demand law actually explains partially what is happening. First, US dollar rises more than 7%. Of course, whenever the US dollar is stronger, the buying forces of other nations become weaker and they need to be more. Second, the slower economic growth of China and Europe, as Dr. Ali from New York mentioned, decreased the demand on oil. And thirdly, as you know, the US harbor the largest shale oil reserve worldwide, and shale oil extraction technology is advancing as we speak. And its production is increasing, making the demand on crude oil less and less with time.
Dr. Ali, how relevant are the supply side factors in the oil price determinations?
Well, before I answer your questions, let me clarify something. There are two primary factors that impact the price of oil. The first is the supply and demand, and the second one is the market sentiment. And the second factor is influenced by mixed of many political and emotional situations, and that's really very difficult to measure. If we're talking about the force of demand here, you have to know that, for example, U.S. oil consumptions by far the largest in the world has recently fallen to 18.6 million barrels per day, down from early 21 million barrels prior to the last recessions. European, for example, oil demands peaked more than 20 years ago and has fallen in each of the last 5 years. Even Chinese thirst of oil is diminishing as economy growth, their shift into a lower gear. China consumptions roughly 10.3 million barrels per day of oil last month, according to Reuters calculations based on primarily government data, up from 9.7 million barrels per day in August, and 9.6 million barrels per day a year earlier. But for the first 9 months, growth in consumption was only about 2% to 9.9 million per day, versus 9.7 million barrel a year earlier. The outlook for China's oil demand is not very promising, as evident from the International Energy Agency moved to lower its annual forecast for Chinese oil demand 5 times so far this year, and that's considered really high.
And now we will have a quick break and we will come back. Welcome back. Now our question to Dr. Fahad. How relevant are the supply side factors in oil price determination?
I tend to disagree with Dr. Ali regarding how powerful the demand law in this issue. I think the supply law is much powerful. The supply of oil is very relevant here. As you know, oil production control is gradually slipping from OPEC's hand. This is because U.S. oil production has doubled for more than 40 million barrels each day. The same is true actually for Canada. Moreover, OPEC is pumping out now nearly 31 million barrels each day. And recently, even they signaled their intention to increase it more and more. Take, for example, Libya. Libya is increasing its oil production, so I believe overall the supply of oil is more than ever, and hence it will lower its price.
Finally, after the great debate from both of our guests, we came to the conclusion that there are many factors lead to the slipping of oil prices. First, decreasing in the economic growth in bigger countries have influenced the decreasing demand of oil. Second, most of the international energy agencies, including OPEC, have modified their prediction of future agreements. Third, a geopolitical factor has a stronger effect on oil price than the supply and demand. And finally, the supply forces supported the geopolitical game more than the demand. To close our show, I would like to thank Dr. Ali and Dr. Fahad for their great contribution, and I will see you inshallah tomorrow. Thank you and goodbye.